We have with us Andy Power. Andy is the president and CEO of Digital Realty, which is a $63 billion enterprise, the largest data center provider in the world. Andy's had a long relationship with Digital Realty, starting as an advisor and working on the company's IPO for the underwriter in 2004. Prior to his time at Digital, Andy's been involved in many tens of billions of dollars of both REIT M&A and REIT capital raising transactions. So he's seen the capital markets from both sides of the street, and he's now running the whole show there. We've talked a lot about data centers today. It's a brand new thing. Digital Realty, which is the largest one, only 20 years old, and it's now the largest global provider of cloud and carrier neutral data center, co-location, and interconnection solutions. I don't know what that means, but I read it. But that's my first question. What does it mean? What is the Digital Realty? What's the Digital? What's the Realty? Tell us about it.
Sure. Thank you for having me today. Really appreciate the opportunity. This is my first NYU, so I guess data centers are popular, so I got the invite. Hopefully I get invited back. So data center Digital Realty, essentially we are the convergence of real estate infrastructure and telecommunications and technology. So I think of us as we are designing, building, owning, and operating the physical infrastructure or manifestation that houses the servers and ultimately data, cloud, and artificial intelligence for our customers. Our platform supports 5,000 customers across 6 continents and 50 metropolitan areas. This is our 20th anniversary as a company coming to an existence. We've come a long way from what a data center was then to what it is today. And we're really supporting technological innovation for customers around the world.
What was a data center then?
I think the most common analogies, think of it like a telco, hotel, internet gateway, so spider web of fiber optics or even coaxial cables or other copper cables at the time, weaving together in a non-purpose-built building. Those physical assets today, be it we have downtown New York City, Chicago, Atlanta, other parts around the world, still live and thrive today. Never meant to be a data center, but essentially serendipitously became the crossroads of the internet and telecommunications. We've come a long way. Today we're now talking multiple megawatts to hundreds of megawatts, single buildings, $1 billion to build and operate. And you obviously can't do that in these urban settings so much as more. So we've kind of spread to more the suburban footprints of where the population dense areas are.
And who is it that's in these buildings? Is it the Googles of the world, or what sort of organizations or enterprises?
So we at Digital Realty are supporting 5,000 customers. So think on the one hand, cage and cabinet oriented global enterprises, global 2000s, $1 billion plus type revenue, with hybrid IT architectures, putting a portion of their workloads or applications within our 4 walls, but also using the cloud, the Googles, the Amazons, the Microsoft's, Azures, who in turn are also some of our biggest customers, and we're supporting 30, 40, 50 locations around the world, almost like a outsourced infrastructure partner in delivering their capabilities.
And why be a REIT?
It's a good question. We started out as the REIT. We were the first REIT to come public. At that time, I was talking to someone in the room a little earlier. I remember, it was the vintage of the '04 class of REIT IPOs, and a lot of new food groups were popping on the scene, like a company called American Campus Communities in the student housing that folks didn't really think of an institutional asset class. There was another REIT called Global Signal, which I believe was the first tower REIT. And I was a junior banker at the time. I remember asking people, why don't we look at that as a peer? Oh, that's a tower, it doesn't count. There's no roof or walls. And to see where towers have come in terms of telecommunications infrastructure, and obviously data centers have come a long way. To answer your question, Adam, it is a combination of skill sets, expertise, infrastructure, assets that relies on certainly technology, telecommunications, infrastructure, but also location and pure play real estate dynamics at the same time. And that really lends it to our strategy. We're focusing on not every single major city in the world, not even all the NFL cities, places with population and GDP, population density and GDP, where the infrastructure has converged, and we see multiple robust and diverse customer sets wanting to put their infrastructure in those locations.
What about this six continents thing? I'm not sure I can name 6 continents, but how did you started out just here in the U.S., and how did you think about branching out, and what's the story of that?
So, think everywhere except Antarctica, which we're not going to be going to. at least probably not under my tenure. So when I joined the company, coming up on my 9th year inside the company, we were largely a U.S.-focused business, largely focused on the wholesale end of the business, called almost the landlord in some WeWork-esque models. I think we had 500, 600 type customers, probably similar amount of employees, or if not less. And what we saw the last 9 years was a few elements to our strategy that really would build a business that would stand the test of time and have true competitive moat and differentiation. One, we saw this business scaling rapidly. When I joined, we were probably 12, 13 billion. We're now 60+ billion dollars. We saw the need to embrace the full customer spectrum. So those enterprise customers that want 200, 300 kilowatts, to those hyperscale cloud compute and AI customers that want hundreds of megawatts. And we also saw this unfolding in a global nature, which is very, I would say, rare for traditional real estate asset classes, where we can essentially offer a platform for these customers, whether you're a major financial services company that wants to land with us in Ashburn, Virginia, or Singapore, or Amsterdam, or those cloud computing companies. Really a one-stop shop to not only lending our expertise on a broader envelope or addressable investment market, but really offering more that's differentiated from a customer lens.
So a lot of the customers are customers on many different continents.
Multi-site, multi-market, multi-country, multi-region.
And have you found the operating environment? I mean, what lessons have you learned in terms of being, globalization is kind of, people talk about globalization, wave is receding or something. How have you found it? Is it more difficult to be global than when you first started out on that journey?
Being global definitely brings incremental complexity. It brings incremental risk. And I would say for a lot of investment strategies, the juice may not be worth the squeeze. For our platform, I look at it as a key differentiator. When I can sit in front of multiple customers and say, I can help you with your network edge in this location. I can put a megawatt with you in Tokyo. Let me tell you about what we're doing in Brazil. And you have customers, partners, teams that are touching these parts of the world. And it's not easy, but we looked at this is where the business was going. And I would say the other piece of the global is it's really tough to penetrate global markets organically, i.e. come in, plant your flag, hey, we're digital, you never heard of us, but we're a global company. So we really respect that balance between global and local expertise in our operating model, because we think this business is a blend in the end of the day. And that's, I think, is called, that ethos has served us well.
We've seen a fair amount of M&A activity, including, and John talked about this at lunch, some privatizations in the sector. How do you feel about being a public company? Is it an operating advantage? Is it capital access advantage? Has it changed? Is it a particularly bad moment? People were complaining this morning about how bad a moment it is in the universe.
So one, I'm fortunate to be in a space that has just got this incredible secular tailwinds of demand. You've got a capital intensity that was large and only is getting larger. And really, our strategy at Digital said, against that backdrop, we need to harness both public and private capital to maximize the opportunity in the end of the day. So we've been a 20-year public company. We've raised pretty much every type of public security to fund that growth over time. But we also have private capital partners along the way, and that's part of our playbook or our strategy to essentially migrate pieces of our business that are slower growing into, call it assets or strategic capital partnerships. I'm also at the same time a big believer of the benefits of the public REIT model, and I know sometimes it feels like you're down on your luck with the markets and the ups and downs. I can look at the history of our company, and whether it was things like using our currency to bring together strategic puzzle pieces. We've done it at least 2 times in my 9 years in the company in terms of stock for stock deals, harvesting synergies, and allowing us to essentially creatively grow the business. So I just think you have to essentially understand the desires and the goals of both those markets and operate within the confines to maximize value.
Where are you going to be in 10 years?
Still working.
Not you, Andy Power, and Digital Realty.
I think we just have an incredible opportunity because we're again addressing 2 large and growing and constantly changing addressable markets. Hybrid IT for our enterprise customers, where we are going to be the private AI hybrid IT solution provider of choice on a global scale for those customers, probably adding a few new markets organically, and really playing some tremendous catch up and maybe eclipsing in a 2-horse race in that category, in a category where customers do not want to put all their eggs in one basket. So massive opportunity there. We're also serving the hyperscale cloud providers, and that is where the 3 gigawatts of our land capacity, which is billions and billions of dollars, will be largely built out for, and that will likely be rotated into strategic capital partnerships and almost like assets or fund management models for hyperscale. So hopefully, I think we'll be a fair bit bigger on the backs of growing the value for our shareholders.
We heard this thing about we're going to run out of electricity. What's the solution?
What's interesting about our sector is you're having a convergence of 2 themes that really lend themselves to incumbents like Digital Realty. One, you're having a new use case application pop on the scene that has like urgent requirements of larger and larger capacity blocks with artificial intelligence, machine learning, large language models. And it's happening, quite honestly, when it's not just data centers, but the economy is running out of gas for some of the natural resources. And we're running into issues on power transmission, power generation, NIMBYism, sustainability concerns, supply chain for data center components, supply chain for substation components. A whole host of vectors are saying, you're not going to build this as fast as you used to, right? And we're essentially very fortunate that we've been in this business for a long time. We've got great relationships with utility providers, with supply chains, and it's allowed the economic pendulum really move back towards our favor and certainly drive rates or rental rates for our customers to higher and higher levels, and really even strengthen our value proposition. You're not, if you're not in some of these markets, you're not in front of a customer because they know you can't get the land. Even if you got the land, you can't get the power. Like the bar to sit at the table as a provider has just gotten higher in this backdrop.
And is there going to be a migration though, or like to regions where there's more power availability or better utility infrastructure? Or?
I'm a big believer, and our strategy dovetails with this, is that all data centers have not been, will, and will not be created equal. We're focused on major markets. Luckily, there's 50 plus of them around the world with robust and diverse customer demand. We're not in this for a trade. We're in this to grow sustainable, to generate sustainable growth for our stakeholders and shareholders. And yes, some workloads will move to markets that are new, and maybe a new market will open up. But the time I've spent the last 48 hours in the Pacific Northwest with a lot of our customers, and what I continue to hear to them is that hearkening back to the major markets as being the critical destinations. And it's, if you want to compare this to more traditional food groups here, yes, the pandemic and the world has changed, but I can tell you the ecosystem around financial services, on the backs of a New York Stock Exchange building built down at the tip of Manhattan years and years ago, still makes this a pretty big financial services hub, despite people being able to move around. And I think the same analogy could be playing out. You could think of where tech is centered around the valley in Santa Clara, Silicon Valley. And the cloud that we support has grown in a locationally sensitive nature where customers have put their infrastructure, they have radius restrictions on the latency or how far they can put their infrastructure from where their cloud deployments are, and you just really can't put our workloads anywhere.
Interesting. We heard also today about how AI is transforming some people's businesses. You can rent your apartment on an app and move in without meeting a human being. It's interesting. I mean, you're not selling data center space on an app, I assume. It's a little bit more of a relationship or a negotiation or something. How is AI impacting your own business?
So we are utilizing AI inside digital on the one hand. So now, on the scheme of corporate America or the world's use of it, it's small potatoes because we don't have that many people, and we're not in the B2C business. But we're using it for RFP responses. We're using it for trying to drive better use of our data and more efficiency and productivity. But the biggest thing is, I mean, it's just a monsoon of demand that is, I would say landing on shore is not accurate. It's on the horizon here. I mean, we're talking about AI right now, about building the models. So customers that want to do that, they're signing contracts in the last 12 months for data centers that aren't even delivered yet, right? While we have ChatGPT on everyone's phone or application as we speak. This is going to move to inference, the debate of whether inference is bigger or smaller. I think of where the data touches all the consumption points or the eyeballs or the people. We're in an era where the lion's share of AI is the public internet, which they've run to the end of the internet, believe it or not. Mm-hmm. Now they have all this private data to think about and where that goes. And then you have enterprise use of this, where all broader business consumes this. So I think the runway of this is going to be vast. It's probably going to be restrained by the physical ingredients, be it the GPUs, be it the kilowatts or the megawatts. But I do think this plays out for a setup for, if you follow our strategy, certainly a great opportunity to create a lot of economic value.
How much of a role is politics going to play in all of that? And is it something you sort of are you working in lobbying, or you're kind of on the other end of what the demand is?
So we do have a lobbying organization, but I would say our industry, given it's called cottage and been under the radar for a long time, is nascent in that. Now, on the one hand, some of our customers are front and center on a whole host of topics, whether they're buying big video game companies mm-hmm. and they're in front of various government bodies. I do think this whole play as it relates to communities and political dynamics is going to just ratchet up further. Unfortunately, your average Joe could say, data centers generate AI, AI takes my job, and that's a really bad, spiral you could go down. I like to remind folks that we are not supporting crypto miners. We are talking about mission critical applications for enterprise businesses that kept the hospitals running during the pandemic. We just had a fantastic release with Novo Nordisk and NVIDIA and building the largest supercomputer in the Nordics. But before that, we were supporting pharma companies and their innovation. These are applications that are making the world a better place in the end of the day. So I think this industry is going to have to continue to mature in terms of its education with the broader community.
Has the job loss thing actually been directed at data center or data center companies, or more some,
More we are on the pitchforks have come out more on wait a minute, there's a transmission line you're going to cut through my back of my yard or down the road near my community. Where's that going? And a lot of people are saying, pointing all fingers at the data centers. The data centers are obviously a contributor to that, but we're not the only contributor to that. And that's where I'd think the initial, call it brushing up against communities. But listen, I don't think that is a bad thing. I think, I'm talking my own book here as an incumbent, being a large owner and operator and having this land capacity with growth for our customers. Having a development program or a supply backdrop that is just more thoughtful, so it's really rewarding folks that have been good stewards to the community, who are holding higher values on sustainability and other attributes, who are really making a difference versus someone who wants to come into town and make a quick buck. So I don't think having a little friction in the construction or bringing on supply is necessarily an awful thing for our industry.
What about sustainability? Are you working with power providers, or I mean, how do you report out on sustainability? What's your trajectory on sustainability?
So one of our core values is focusing on our customers at digital, and we focus on sustainability because it's important to our customers and it's the right thing to do. This predates my arrival inside the company. We had a head of sustainability. We've been really moving the needle. We got over 1 gigawatt of green power, which we are signing long-term contracts for true additionality to the grid, creation of solar farms or wind farms. We're actively on the verge of investing directly in those types of projects. The misnomer is no, they're not actually plugging into our data centers. That doesn't really work. Obviously, we're building infrastructure in these green arenas that are contributing. We're investing in venture funds that are thinking about other parts of innovation. Just in the last 24 hours, I was with a customer that has goals in 2025 and 2030 not to be carbon neutral, to be carbon negative. Like they want to remove all the carbon, they publicly said this, that they've ever created as a company. So, and I think that's a good philosophy because we are supporting these incredible companies and customers that are changing the world, and they got to bring the world along with them on this technological journey, right? And bringing out infrastructure in a responsible, sustainable fashion has to be part of that puzzle. And we're proud to be recognized as a leader in that category.
And you're optimistic on sort of the decarbonization or of the human experience?
I'm optimistic. I think the other thing that we often don't forget is the same technology that we're using to write our emails right now could be the game changers that make tremendous scientific breakthroughs on things like decarbonization, right? I think that is where technological advancement is really what's going to move the needle more than just moving people to EV cars and things like that at the end of the day.
Let me pivot completely. When you worked on the IPO, what was it, in 2004? Did you have this picked out as a career path? And more seriously than that, we have a lot of students here, people thinking about the real estate business, the industry. Tell us a little bit about your career path and what you would do the same, what you would do different, what advice you would give them.
Sure, so I would put myself in the better to be lucky than smart category. I'll go 2 steps back. Because in 2004, that was my second job out of school. My first job out of school, I luckily declined the offer. This is after the dot-com crash. This was after 9/11. And I declined the offer to go join Circuit City Finance in Richmond, Virginia. So I missed that bullet. And I did a few years on the lending side of the business, not even real estate. It was adjunct to real estate. And then I moved to Manhattan. And within my first year, I'm working on this IPO of this 13, 14 asset company that was this intersection of real estate and technology. And I was, and I've said this a lot often, I was literally the financial analyst building the model and fetching the coffee 20 years ago. And I had no idea where this was going. And we barely got the company public, quite honestly. I mean, multiple dollars below the pricing range. I remember vividly, may have been my first time actually, because I grew up on the East Coast, probably my first time even spending any time in the state of California. I was literally on Sand Hill Road at this Woody walk-up office, and I think the Kleiner Perkins office was down the hall, and I had no clue who Kleiner Perkins was. I think I did my first Google search in my life like 9 months prior to this. And obviously I helped the company from a long time of the outside in terms of raising a lot more capital and getting investment grade rated and M&A. And then I came on board in 2015 as the CFO, and then obviously was able to grow my responsibilities over time. To get your second question, I would say there was 3 things if I look back that were most relevant to me. And some of it's a little redundant with what you heard with lunch. One, I'm a big believer of
If you say it, then we'll know it's right.
Good. I'm a big believer of hard work, work ethic, and commitment. That was my ethos, how I lived and operated. That was my ethos, how who folks I put my time into and mentoring and hiring. And it was with a view of, I'm not working for the paycheck, I'm working for the experience more than anything. And really just trying to, what was going to make me better for the next opportunity that I could go after. And so I'm a big believer in that, and I believe it served me well. The other thing I would say is, and this is probably more, the rearview mirror, it's a little clearer with hindsight. Patience, and I told this story to John, because we partnered with John on a big announcement at the end of last year. And I said, John, believe it or not, almost 20 years ago, I interviewed with you. Ken Kaplan, who's now the co-CIO of all of Blackstone, not just Blackstone Real Estate, he interviewed me along with some other folks, and I couldn't get a job. And I know I was a couple of years into second job, still a second job at school, but a couple of years into banking. But I was like, this private equity thing, this grass is really greener over here. And I'm like, I gotta get on this. But it didn't work out. But you know, and before I knew it, there was a financial crisis at my doorstep, and gave me a lot of good opportunity and experience to sink my teeth into learning. I think my patience over time served me well. That when one door closes, a window may open down the road. And then the last thing I would say is also another one, hindsight's 2020, risk. I'm a big believer of you got to take risks. You got to take risks on yourself. You got to take risks on people you work with. It's tough kind of moving up the investment banking track when you move from analyst, associate, and eventually to managing director. Those are different roles you're doing, and you move from doers to managers to relationships, and you don't take risks on people and let them fail, pick them up, and let them learn a lesson. The other story I have, so in 2015, when I left banking and joined digital, I coincidentally had one other opportunity in hand. I was a similar role at a New York and Gateway City-oriented office company. And not to poo-poo on office, because I'm sure it's going to bounce back, but I could either stay in New York, where I've been living for 12 years with my wife, or work on a food group that at the time felt bulletproof, or move across the country to where I knew nobody in a sector that, I don't know, what's going to happen with these data center things? Is this technology is really always going to be a friend to data centers? So fortunately, I made the right decision there and made the move and got inside the company that I'd called supported for a long time from the outside. So I think taking risks is another thing that's really
that was what was attractive about it, basically? It was a little bit more volatile?
It was a place where I said, you know what, this company's going to be dynamic. Mm-hmm. This company is going to be doing things that, so take the path that may be a little less. At the time, data centers were not the bingo buzzword that they are today, right? So it was something like, you know what, I'm going to get a lot more out of this in my growth more than anything, which was a risk. So, but.
Well,
better to be lucky.
Looks like it's worked out great.
So far, so good.
Andy, thank you so much for being with us here today. Really, really
thank you.
interesting.